Did you know Nigerian manufacturers are paying taxes they don't even know exist? As critical as the manufacturing sector is to Nigeria's economic growth, the sector is burdened by an overwhelming tax burden in the form of hidden costs. These hidden costs, known as disguised taxes, are silently draining businesses, making it harder for them to grow, compete, and stay profitable. In this video, we will explain what disguised taxes are, how they impact the manufacturing sector, and share practical recommendations to address these challenges. By identifying these hidden burdens, we aim to foster dialogue and provide solutions for a more equitable and growth-oriented environment.
Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of taxmobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So, if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos.
Nigeria's manufacturing sector is a vital pillar of the economy, contributing approximately 10% to the GDP while employing millions and driving exports. However, its growth has been stifled by multiple factors, including poor infrastructure, high energy costs, and regulatory inefficiencies. Among these challenges, one of the most overlooked yet highly detrimental issues is the burden of disguised taxes. Disguised taxes are indirect levies imposed on businesses under the guise of regulatory fees, compliance costs, or operational charges. While they are often labeled as administrative or service-related fees, they ultimately function as financial burdens that reduce profitability, limit competitiveness, and deter investment. Understanding disguised taxes. Disguised taxes manifest in several ways, including regulatory fees, levies imposed by agencies such as the Standard Organization of Nigeria (SON) and the National Agency for Food and Drug Administration and Control (NAFDAC) for product certification, inspection, and approvals. Multiple levies across government levels. Federal, state, and local governments impose overlapping taxes, creating confusion and double taxation. Compliance costs. Fees for environmental audits, fire service certification, and signage permit. Customs and excise duties. High tariffs and unofficial charges at port inflate the cost of imported raw materials and equipment. Private infrastructure costs. Manufacturers incur additional costs to provide their power, water, and logistics, compensating for the lack of public infrastructure. What makes disguised taxes particularly problematic is their unpredictable and unregulated nature. They are often characterized by lack of transparency. These charges are often arbitrary, with businesses unaware of their basis or how they are calculated. Redundancy. Different agencies levy similar fees for overlapping functions. Inconsistency. Fees vary widely across regions and are subject to frequent and unpredictable adjustments. Disguised taxes in Nigeria's manufacturing sector. Regulatory fees. Regulatory bodies such as SON and NAFDAC impose significant fees for product certification, periodic inspections, and annual license renewals. These fees are often exorbitant, particularly for small and medium enterprises. Local governments also impose arbitrary levies for waste management, signage permits, and environmental compliance, leading to duplicative charges. Infrastructure costs. Manufacturers often bear the cost of private electricity generation, logistics, and water supply. For instance, the average manufacturer in Nigeria spends 40% of its operational budget on power. Import duties and customs fees. Manufacturers face high tariffs on essential raw materials and machinery, which is further complicated by unofficial charges from custom officials. This leads to delays, higher costs, and reduced efficiency. Multiplicity of taxes. Manufacturers are subjected to a range of overlapping taxes, including company income tax, value-added tax, education tax, local government tenement rates, environmental levies, etc. Impact of disguised taxes on the manufacturing sector. Increased cost of production. Disguised taxes inflate production costs, making locally manufactured goods uncompetitive against cheaper imported goods. Reduced investment. Uncertainty regarding hidden levies discourages both domestic and foreign investors from entering the sector. Stifled growth. SMEs are disproportionately affected as they lack the resources to navigate the complex tax landscape. Encouragement of informality. Many small manufacturers operate informally to evade excessive levies, reducing government revenue. Unemployment and social impact. Reduced profitability leads to job cuts, worsening unemployment and social inequality. Now, let's consider the impact of disguised tax on key industry. The cement industry. Cement manufacturers in Nigeria face a combination of high import duties on machinery, multiple levies on mining licenses, and steep environmental compliance fees. These disguised taxes significantly increases production costs, making Nigerian cement among the most expensive in the world. The food and beverage industry. Businesses in this sector report paying up to 20 different levies annually, ranging from product registration fees to signage permits. These costs are passed on to customers, leading to higher food prices and reduced affordability. Policy and regulatory perspectives. The Nigerian government has made effort to simplify the tax system through initiatives like the Finance Act. However, several structural challenges persist. Inadequate coordination. Federal, state, and local authorities operate independently, leading to conflicting regulations. Weak enforcement. Regulatory agencies often exploit weak oversight to impose arbitrary fees. Recommendation for reform. 1. Tax harmonization. Streamline tax administration to eliminate redundancies. Introduce a unified tax system across all tiers of government. 2. Transparent fee structures. Regulatory agencies should publish clear and consistent fee schedules to ensure transparency and accountability. 3. Infrastructure development. Invest in power, transportation, and water supply to reduce manufacturers' reliance on private infrastructure. 4. Supportive tax incentives. Provide tax relief for locally manufactured goods such as VAT exemptions and tax holidays for SMEs. 5. Capacity building for regulators. Train regulatory officials on ethical tax collection and the importance of a business-friendly environment. 6. Digital tax platforms. Adopt e-tax system to reduce human interactions, curb corruption, and ensure accurate reporting. 7. Dialogue with stakeholders. Engage manufacturers, policymakers, and tax professionals in regular consultations to address concerns and improve the tax environment. In conclusion, disguised taxes pose a major barrier to the growth and competitiveness of Nigeria's manufacturing sector. These hidden levies inflate production costs, discourage investment, and weaken the industry's global competitiveness. To overcome these challenges, a comprehensive reform strategy is essential, one that prioritizes tax harmonization, regulatory transparency, and infrastructure development. By creating a fairer and more business-friendly tax environment, Nigeria can unlock the full potential of its manufacturing sector, attract investment, and drive sustainable economic growth.
Thank you for joining us on this enlightening journey. If you have any questions or want to share your thoughts, feel free to drop them in the comments below. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.